And we have a very strong and steady advance decline ratio on our hands as well. So continuing from the good work that we saw yesterday into today, and let's see for the rest of the week or not. Hi, Prashant.
Ekta, hi. So the market's cruising along nicely, and this is absolutely a great outcome given the fact that Wall Street is deep in the red on Friday, and news flow particularly has not been all that great. You look at the PMI growth numbers out of Europe. You look at what's happening in Asia. And of course, the rally that we've seen, the near 500-point rally that we have seen in the last 3 trading sessions till Friday's close. The Nifty actually went up about 470 points from the lows of Tuesday evening, the lows of Tuesday. So, given that move, another 65 points right off the bat this Monday, I think is absolutely great. 10,872 is what we are looking at. As we go ahead, remember, there isn't, as we've been highlighting with a lot of the big events behind us, there is no scheduled big risk event ahead of us. An event which people are anticipating. The outcome is unknown, which could swing the sentiment on the bullish side or bearish side, at least for the next 10-15 trading sessions. So, I think bulls are happy with that kind of a clean runway to continue to sort of build on these gains. And we'll see how far things go. But for now, it's looking pretty okay. Sudarshan, Sukhani of S2Analytics.com is with us. Sudarshan, morning. Thank you for your time. Your sense on what the Nifty is doing and whether there is a trade already here?
Yeah, good morning. Well, the Nifty was in a trading range for 2 days, Thursday and Friday, and today morning it broke out of that range on the upside. That gives us a buy signal. So the Nifty was a buying opportunity in the morning before the recent current 2-hour rally, and even now, let's say even at these slightly higher levels, the Nifty remains a buying opportunity because a trading range breakout must be respected. So buy the Nifty and buy the Nifty Bank both are available for going long. And then luckily we also have the end of the year. Seasonally, the end of the year, the last 2 weeks of December are bullish. So everything is going well. Don't worry about the levels, just be long.
Okay, don't worry about levels, just be long. In terms of stocks, which are the stocks you'd go long on, Sudarshan? Morning.
Good morning. Well, we go for mid caps because we are already covering the large caps with the indices. Cadila Healthcare is a buying opportunity. Remember, the pharma sector itself is cheerful today, and Cadila is doing well. So consider buying Cadila for the day and also as a positional trade. Then buy ICICI Bank. This is a large cap. I think ICICI Bank will now outperform the private sector banks. It's already doing that, and that should continue for the day. And finally, consider buying Jubilant Foods. Small correction, consolidation and breakout. The stock is already an outperformer. So be on the long side of the market, focus on indices and buy mid-cap stocks.
Sudarshan, Tata Motors, 20 rupees in the last, 4-5 trading sessions from 154 to 174, almost 5% higher. Anything here?
No, there's nothing there. These small bear market rallies come in all the stocks. Avoid it. There are so many better opportunities.
Any thoughts on Bandhan Bank? Have you looked at the chart? It's been a steady climb.
No, I haven't actually looked at it, so I'm so sorry, I can't reply.
No problem. Recent low was about 470, and it's about 550 plus. And of course, from the October lows of 370, it's come a long way. But that is a Bandhan for you. I think we've got a viewer question, Ekta.
Yes, but before that, Sudarshan, what would your call be on maybe a couple of stocks you'd be negative on in this market? Say, for example, a Bajaj Finserv, Indiabulls Housing Finance, slight bit of profit booking. I'm not alluding to that, but your call on that as well as any other sectors or stocks you probably are bearish on.
See, I'm bearish broadly on the NBFCs. So not Bajaj Finserv, that's been an outperformer recently, but Indiabulls Housing, the small rally that we saw, that 8-10% rally, should eventually dissipate. So also with DHFL. So that's a sector where traders should either consider taking profits if they have long positions, exit, or actually take shorts whenever the market starts giving way.
Okay. All right. Well, we have that Twitter query for you now. Arjun has 232 shares of IDBI Bank, which is bought at 66.25. Wants to know the way forward on that.
Well, the way forward is to hold it. You know, the worst is over for the bank. The chart suggests that the sharp dips that we saw, a V-shaped rally that has already come in, has placed a low in place, put a low in place, and now slowly and steadily we should be seeing it rally towards 80 rupees. So I would suggest hold on to it, you will get gains here.
Okay, Sudarshan, thank you very much. Appreciate you joining in with that perspective and, of course, advice coming in for a viewer. Just going to highlight a few stocks before we go any further, and this is the broader market stuff which is going on. So I highlighted Tata Motors. It'll come up on your screen again. We should look at BEML. BEML is up about 3%, 807 rupees or so. Wockhardt is up 3.5%. It's at about 528. I highlighted Bandhan Bank, which is at about 551. You should look at Container Corporation, which is up about 3.25%. Max Financial, MFSL, which is at about 450, is up 4% and more. IGL is up about 3.33%. And there is what... Surya Roshni, which is up 9%. And you go down the list, I mean, volumes thin out. I think over the next 10-15 days, essentially the next 2 weeks going into the year end, that's going to be a big problem. Market participants are away, especially global markets, and here as well. And volumes will keep thinning out. So any price action looks exaggerated on because of the lack of decent enough volumes. And it will keep happening through the course of the next 2 weeks or so. Okay, one sector which is in focus is the power sector. Power grid, NTPC are getting a boost post the release of the draft tariff regulations by CERC. This came out on Friday. What's been a surprise is that regulated ROE for these entities has been maintained at 15.5% versus the expected cut of between 1 and 2%. Anisha Jain is joining in. It's a bit of a complicated subject. I mean, if you go into the nitty-gritties, but the broad big takeaways, Anisha, these draft rules which have been put out, what do you make of it?
Well, I'll keep the technical jargon away and keep it easy for you. As you mentioned, the draft tariff regulation is out. This is for FY19 to 24 and it is applicable on the regulated power producers like NTPC as well as Power Grid. Now, the consensus on the street was that the regulated ROE that these companies are allowed to make would be cut down from 15.5% by around 1 to 2 percentage points, but that has not happened, and that's the reason these stocks are rallying, given the fact that their EPS would be maintained, and this gives more revenue as well as profit visibility for these stocks going forward. Separately, what has happened is that they have allowed a lot of expenses as well as improved the efficiency norms. Now, these efficiency norms can be a double-edged sword. Yes, it's positive for the overall sector that if these guys maintain a higher PAF, which is plant availability factor and incentives, that is better for operational front. But brokerages like Bank of America, Merrill Lynch say that the companies won't find it very easy to do so, and that's why, as per them, the net impact of this tariff regulation is negative. In fact, Bank of America, Merrill Lynch has cut down the target price both for NTPC as well as Power Grid. But in essence, the fact that the profitability of these companies will be maintained is a positive, and most of the brokerages, whether Edelweiss, Reliance or any other brokerage like CLSA that you pick up, they see it as a positive, and the stocks also rallying on back of that.
Okay, yes, absolutely, Anisha. Thanks very much for that. In fact, NTPC in fact is off the day's high. So if you just want to look at the intraday chart of that particular stock, it should come up for you. And Power Grid, which is still holding up with gains up around 2.5%. But the story seems to be in a couple of these rate sensitives today as well. So Tata Motors is really powering ahead with a gain of around 4.5%. Maruti is up around 1.4% at this point. And a couple of others from the banking space seem to be IndusInd Bank, which is up around 1%, ICICI Bank, which is doing exceptionally well today, along with HDFC. So both the stocks should come up for you at this point. HDFC is up around 1%, and we have ICICI Bank, which is up around 2%. And Prashant, you know, a lot of news coming in the pharmaceutical space also. For example, Glenmark, which is higher, Wockhardt, which is up around 3.5%. We'll discuss,
triggers there. Vedanta is the other one, which is in focus. We have the NGT, the National Green Tribunal, which has ordered the reopening of the copper smelter. It's not all clear. It'll, I guess, most likely go to the higher courts. But Nigel is here with what the street is making of it. Nigel, morning.
Well, morning, Prashant. It's not all clear, and that's the reason why, in fact, the stock has come off the high point of the day. I'll just give you a few details. Yes, over the weekend, the NGT order was out, and that allows the Tuticorin smelter to be reopened. So that's definitely a positive news that's coming in there. But just to tell our viewers, why is this particular smelter important? One is because it contributed close to around 4 to around 5% of the consolidated EBITDA in FY18. This particular smelter has been shut from March 2018. In May 2018, the electricity as well was cut off for this particular plant. So in terms of the stock move, yes, it's positive. And in fact, most of the street hadn't expected it to be, to restart in FY19. So in that sense, it is positive. The big question, though, is how soon can it restart? There are two factors out here. One is that, in fact, the state government's authorities, they have to cooperate with the company and allow them access into this particular plant. So that's point number one. And secondly, remember, this plant was abruptly closed down. So restart as well will take some time. Morgan Stanley, well, they have a target price of around 235, but they have not included any kind of share value for this particular copper smelter. But if in fact it restarts totally, then it can contribute nearly around 19 rupees. That's 8% to their target price. Not just that, they're saying that the EBITDA estimates as well as the EPS estimates will be upgraded by nearly around 4 to around 8% if this facility is restarted. We spoke to the management earlier today. They said that the restart will take anything between 1 to around 2 months. So on the back of that, we'll have to wait for clarity. The NGT order is positive, but how soon can it restart? That's the question. And also, in all likelihood, the state government will go ahead and appeal in the Supreme Court. After admission of the Supreme Court, after the Supreme Court admitting their particular, their particular plea, then in fact we'll have to see whether or not a stay comes in or not. But on that note, let's listen in to what the Sterlite Copper management had to tell us earlier today.
The NGT judgment has been very, very positive for us, and it has directed the Pollution Control Board to reissue the consent to operate within 3 weeks of the judgment date. And it has also directed the district administration to give us access to the plant, which we've been denied for the past 6 months. Now, once we get the access, it will take us maybe about a month or two to get the plant back into shape, and so that we can do a safe restart.
65 points on the Nifty, 10,870 is where we are at. It's a sort of cruise control mode so far. Absolutely no hiccups. And I mean, the news cycle, though, is a bit slow, as is expected in the fag end of the year. And I guess volumes, an hour more and we'd probably be able to take stock of what volumes are midday as compared to, say, the last 10 days or the last 1 month. And I suspect volumes would have come off quite a bit. Manisha is here with a roundup of what's happening in the commodity space. And we are focusing on metals to begin with. Manisha, morning.
Morning, Prashant. The concern, or rather the problem of slowing volumes, is seen in the international commodity markets as well. And as we will get into the next week, it actually does get accentuated even further there with the exaggerated moves on the top of that. But this week, you have the US Fed meeting on 18th and 19th. So ahead of that, you actually have seen the markets go sideline. In any case, 2018 is ending with the negative, returns in case of all of these metals, starting with the precious metals, where you have seen the gold prices decline 2%, silver is down more than 9%. Everything in metals, whether it is ferrous or non-ferrous, also has seen very sharp declines come in. Of course, it is about the strength in US dollar, which is trading at a 19-month highs. You also have seen concerns from the US and China trade war issues as well. So copper and nickel and aluminum on your screen down between 6 to 12%. And very sharp gains is what you have seen come in for the nickel and zinc prices. These are down. Nickel and lead prices, we have seen prices decline by 25% for lead. Zinc is down 20% as well. And the ferrous metals like steel and iron ore also have seen a decline between 5 to 11% on the higher side. And much of these declines actually have come in for the second half of 2018. But what is the sense that the markets are taking right now, and how do we step into 2019? To help us analyze that, we are now joined by Jonathan Barad. Jonathan, hi. Thank you so much for joining us. Let's start with the precious metals first. And even as we do hear a lot of accumulation calls coming in for this space, what is your sense? Do you also believe that the US Fed rate hikes would be on a pause and the dollar index perhaps has peaked out?
Manish, good morning. Yes, I do. I actually feel when you're looking at gold and you're looking at where the US Fed is, there's a general consensus in the market that we are seeing an economic slowdown. Those numbers we saw late last week out of China indicated to me with industrial production under pressure. News from France, also the economy slowing down. So yes, I think a pause by the Fed is certainly there. As a result of that, we don't have any of those inflationary fears or pricing fears. So although we like gold, a little bit of a setback, perhaps we'll get more geopolitical issues that'll spur more buying.
So what is your sense? What kind of a range are you working with for 2019 for the gold prices now?
I'm actually looking for gold to continue to consolidate, but more so continue to pressure the top side. I am looking for gains up around that 1270, even higher to 1340 is one of the targets we do have. So I'd like to see gold continue on the top side. The question is obviously what are the machinations, the macros that'll push it there, and obviously there are a few out there. We do look for economies to slow down in the first quarter, but then coming into the second quarter, the way we see it at the moment, things will start to pick up, price pressures will pick up, and of course gold will be favoured.
Jonathan, also, how have you seen the base metal prices behave? We've seen the Chinese data come in on the weaker side, almost all of it. And then, of course, the US-China trade concerns in the second half really pulled the prices much on the lower side. With copper down 12%, aluminum is down 6.5%, zinc is down 20%, lead is down 25%. Anywhere that you see the shrinking supplies as we are working with right now work as a positive factor?
Well, that's a very interesting thing that you've mentioned. And some of those metals are in a deep backwardation, which suggests that there's more supply needed. But it also tells us that going down the track, perhaps we don't need that demand, and that's why we're in the backwardation. But I generally hold that because we do have a supply crunch, and when you look at, for instance, copper, and you look at the inventories, although a small build, they're at a 10-year low. So if we take the approach that the US-China trade tensions will ease and we'll get back to some normal economic behaviour, then you have to assume that that supply deficit in some of those metals will actually support the prices. We're looking quite bullish for copper 2019. Obviously, we'll see that demand pick up towards later quarter one, but at the end of the day, of course, we have that shrinking supply and have had it for some time. Then I feel that copper will have a good run to the top side. We're quite bullish copper, see this dip as an opportunity to get long.
Jonathan, since you are buying gold and precious metals and copper in the base metal prices, what kind of an upside then are you working with in sense of percentage terms for 2019?
Oh, look, I think when you go through the board, when you look at copper's, for instance, one that's a big focus for us, and where it's trading, that 6,300 basis the LME is quite critical. And if we do get that through, then you can see quite a significant move to the top side. We're talking about moves close back to through that 7,000, 7,300. So naturally the macros will follow those macros quite closely. But we see significant moves for copper up to the top side once it gets through that resistance that we're seeing, which is around that 6,300. When you look at some of the other metals across the board, I'm looking once again for gains of close to that 10 to 15%. And naturally, we've got to make sure that the macros all look together. But when you look at it from a technical basis, you can see some good gains. As I've already mentioned, those gains in gold, which I like. So when you look at the non-ferrous, the ferrous, the precious, more of an upside across the board.
All right, so maybe the downside is done in 2018. 2019 does look positive. 10 to 15% gains is what are expected in the metal space. Jonathan, thank you so much for joining us. Really appreciate you giving us such strategies.
Okay, all right, Manisha. Thanks very much for taking us through that conversation. Well, for the market, steady as she goes. 10,868 is where the Nifty is at. Bank Nifty up around 0.7%. A couple of these pharmaceutical stocks are bouncing around, so we'll talk more about that in just a bit. But mixed, because Biocon is at the low point of the day, down around 2.3. Much to incrementally talk about, except for the fact that the mid-cap index is up around 0.2% at this point. And we have a steady advance decline ratio. So let's see whether that sustains or not. So currently around 1,160 stocks advancing to around 801 stocks declining on the Bombay Stock Exchange. SAIL stands out, so that stock is up around 2.7% at this point. So that one is higher, and even something like a BHEL is not doing too badly. So that stock is up around 2% as well.